Right now, millions of Indians are committing a silent financial mistake. If you have 1 lakh rupees sitting safely in your savings bank account, you probably feel secure. You think your hard earned money is resting safely, waiting for you. But here is the brutal truth: your bank will never print in their brochures. Your money is legally losing its value every single second it stays there. You are not saving wealth, you are losing it. Let's talk about the hidden trap of Indian banking that school never warned you about. Think about how a savings account works. Top Indian banks like SBI, HDFC, or ICICI pay you a miserable 2.5% to 3% interest per year on your balance. Sounds like a gain, right? Wrong. Because there is a monster in the economy called inflation or Mehangai. In India, inflation averages around 4% to 5% annually. Food inflation is often even higher. This means if the things you buy are getting 5% more expensive every year, but your money is only growing by 3% in the bank, you are running a net loss of 2% every single year. Your purchasing power is shrinking and your money is buying less than it did yesterday. Why do we do this? Because our schools never taught us financial literacy. So we rely on traditional advice. Our parents grew up in an era where fixed deposit paid 10% to 12% interest. Back then, safe saving actually worked. Today, older generations will still tell you to just keep it safe in the bank or just do an FD. But the financial world has completely changed. If you follow 1990s advice in 2026, you will never build real wealth. FDs barely beat inflation after you pay taxes on the interest. Keeping your money strictly in a basic account isn't safe. It's a guaranteed way to stay financially stagnant. So, what is the solution? Am I telling you to empty your bank account today? Absolutely not. You need a savings account for your monthly expenses and an emergency fund. But an extra wealth needs to be put to work. To build real financial freedom in India, your money needs to grow at 8% to 10% or 12% a year. That means learning how to safely allocate your money into equity mutual funds, public provident funds, PPF, or low cost index funds that track the growth of the Indian economy. Don't let your money sleep while you work hard. Make your money work hard for you. If you want to learn the practical money rules they skipped in school, hit the subscribe button and let's build wealth together here on Airavata.